You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Thursday, March 7th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Thursday. The first thing to know is all eyes are on the ECB and Draghi. Faced with a serious slowdown in the Eurozone, the European Central Bank is expected to slash its forecasts and give its strongest signal yet that fresh stimulus is coming in the form of more cheap loans. The loans, known more formally as targeted long-term refinancing operations, are expected to benefit Spanish and Italian lenders most, while aggravating the problems of excess liquidity for sounder banks in Northern Europe that don't need the ECB's support as much. The bank's decision was due at 7:45 a.m. Eastern, while President Mario Draghi's press conference is scheduled for 8:30 a.m. Eastern. The euro was little changed at $1.1309 by 5:30 a.m. Eastern Time, after going as low as $1.1284 the previous day, the weakest level since February 19. The second thing to know today is Huawei sues the U.S. government. Chinese telecoms equipment maker Huawei Technologies sued the U.S. government, saying a law limiting its U.S. business was unconstitutional. Huawei said it filed a complaint in federal court in Texas challenging Section 889 of the National Defense Authorization Act, signed into law by U.S. President Donald Trump in August. That law bars federal agencies and their contractors from procuring its equipment and services. The lawsuit marks the latest confrontation between the Chinese company and U.S. authorities and is likely to overshadow prospects for a U.S.-China trade deal. The third thing to know today is Wall Street is set for a lower open. U.S. stock futures pointed to a lower open pre-open as market players remained focused on U.S.-China relations. Elsewhere, European stocks were lower across the board ahead of the ECB's meeting. The Pan-European Stocks 600 index was down 0.4%, retreating further from 5-month highs touched earlier in the week. Earlier, markets in Asia closed mostly lower as investors showed caution over the outlook for global growth. Japan's Nikkei fell almost 0.7%, while Chinese blue chips snapped a 4-day winning streak. The fourth thing to note today is Kroger and Costco highlight the last big day of earnings season. Now, is it just me, or have they been saying the last big day of earnings season for the past 3 weeks? Just an observation. Anyway, I digress. The fourth quarter earnings season has all but wound down, but results are expected from a pair of retailers today. Pre-open, Kroger, the supermarket giant, reported its earnings. They were expected to report at 52 cents a share, according to analyst forecast by Investing.com, and revenue was expected to be $28.5 billion. Kroger faces heated competition in the grocery store space, not least from online rivals Amazon, who announced plans to start a new brand of supermarkets in major U.S. cities last week. After the bell, Costco Wholesale is expected to report $1.69 per share in earnings. Revenue is projected at $35.66 billion, up 8.9% from a year ago. The fifth thing to know today is jobless claims are on tap. On the data front, there will be weekly jobless claims figures and unit labor costs, both due out at 8:30 a.m. Eastern. Those numbers are out. Consumer credit numbers will be released at 3 p.m. Eastern. Federal Governor Lael Brainard is also due to speak. The U.S. dollar index was at 96.81, within sight of Tuesday's two-week high of 96.95. In the bond market, U.S. Treasury prices inched higher, pushing yields slightly lower across the curve, with the benchmark 10-year yield falling to 2.68%, its lowest in a week. Our second story today is from Investing.com, and it's basically kind of a follow-up here. ECB pushes back rate hike and announces new stimulus to revive growth. The European Central Bank pushed back its timeline for raising interest rates and announced a new round of low-cost funding to banks known as TLTROs, which we talked about in our last story, effectively admitting that the slowdown across the Eurozone's economy will last longer than at first thought. It left its main refinancing rate, which determines the cost of credit in the economy, unchanged at 0%, where it has been since March 2016 as expected. However, the other announcements were a surprise to most in the market. The Governing Council expects the key ECB interest rates to remain at their present levels, at least through the end of 2019, the ECB said in a slight change of phrasing. Until January, it had said rates won't be on hold, at least through the summer. Its previous guidance had left the door open for a rate hike anytime from September onward, a timeline that now seems ambiguous given that Germany and Italy, which account for over 40% of the currency area's economy, didn't grow at all in the fourth quarter and have also started 2019 weakly. The euro fell around half a cent on the news and was down 0.2% on the day at 112.70. That's compared to 113.11 ahead of the release. Again, the pound, the single currency, decreased to 85.96 from 86.12. European bond yields also moved lower as rate hike expectations receded. The yield on the benchmark Italian 10-year bond fell to 2.58% from the prior 2.62%, although the 10-year German Bund only edged down 0.11% from 0.12%. And our final story of the day is from CNBC.com. U.S. productivity rose a modest 1.9% in the fourth quarter. U.S. productivity grew at a rate of 1.9% in the fourth quarter, a slight improvement over the third quarter. Labor costs rose 2%, the strongest gain since the beginning of 2018. The Labor Department reported Thursday that the result from the October-December period was slightly better than a 1.8% rise in the third quarter. For the full year, productivity rose 1.3%, a small improvement from a 1.1% gain in 2017. It was the best showing since a 3.4% productivity surge in 2010. And that, ladies and gentlemen, is news you can use. options for today, March 7th, 2019. Your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.